A golden cross has just formed over the gold price. Is this going to be the catalyst that's going to usher in a brand new long-term uptrend for gold? I'm Biko Konstantinos, and that's what we're going to talk about today. Make sure you like this video, as that will really help it to get shared. And if you want to hear a broad range of financial topics spoken in a balanced way, trying to be as simple and informative as possible, please consider subscribing to my channel, as my goal is to provide that supporting information to help you make all your financial decisions. What is a golden cross? Well, a golden cross is a technical chart pattern indicating the potential for a major rally. A golden cross occurs when a stock or an index's short-term moving average crosses above its long-term moving average. Now, probably the most popular moving averages to use for a gold cross are short-term 50-day moving average and longer-term 200-day moving average. For a golden cross to occur, the short-term moving average, in this case the 50-day, needs to be below the 200-day moving average, and then the 50-day moving average turns upward and breaks above the 200-day moving average, and where the break occurs, that's called the golden cross. The opposite of this occurs when the 50-day moving average breaks below the 200-day moving average, and that's actually called a death cross. So what's a golden cross telling us? Well, it's telling us that there's been a short to medium downtrend, which has caused the 50-day moving average to be below the 200-day moving average. But a golden cross means that the actual downtrend has basically started to bottom out and could be reversing to an uptrend. And that's signified by the 50-day or shorter term moving average. So the shorter term movements of the price actually turning upwards and breaking above the longer term stretched out moving average. Now, quite often when you have this break above, the moving averages can then act as support levels, and then they can lead to longer term uptrends. The golden cross on charts can be used for any moving averages, but it's well known that using the longer term moving averages produce the biggest trends. You could even trade based on a golden cross breakout. So some people might wait for the breakout to occur and they might place a trade there, and then they might wait until the 50-day moving averages crosses back below the 200-day moving average before they exit the position. Now, I'm definitely not saying to use that as a trading method, because most indicators need to be combined with many other factors before you make a trading decision, and using something like this will definitely lag a bit. So if the price falls, you'll get a lot of, say, profit erosion before you would exit if you were just to follow this indicator. However, it's very interesting to look at if you look at some historical charts and you look to see where there's been a golden cross breakout, how long the uptrend or the bull market has lasted before it reverses. As this excerpt from Investopedia states, if you were to follow the S&P 500 and look for some golden breakouts and consider the market to be a bullish market while that breakout or while that trend is in place, and when it ends, you might start to think that, okay, that bull run or that larger uptrend has now finished or is at risk of slowing down. So this is an excellent indicator to keep as one of your trading tools or technical analysis repertoire. If we do look at the S&P 500 chart, we can see the blue line represents the 50-day moving average and the orange line represents the 200-day moving average. Back here in early 2000, we saw that sharp drop from COVID and then the strong rebound. You can see the lagging effect with these moving averages, because when the 50-day moving average crossed below the 200-day moving average, that was pretty much right at the bottom or slightly after at the peak low of COVID. So if you wanted to use it as a sell sort of an indicator, in that case would have been terrible, because if you had waited for that cross, that death cross to occur, you would have sold far too late, nearly right at the bottom. But that's why using the 50 and the 200-day moving averages, it wants to show us the longer term trends and that's why it won't usually cross over too often if there is a trend in place, whether it's up or down. The times where it will cross over fairly often is if there's some wide, choppy type swings in the market. It hasn't really got a set direction. Then you might see some failed crossovers, and what we might mean by that is a crossover that doesn't eventuate into a new trend. So here in July 2000, we had the golden cross over the S&P where the 50-day moving average crossed above. And following this along, we've seen this amazing bull trend, this amazing bull run that is still clearly above the 200-day moving average, and both moving averages are turned upwards. So they're both in the upwards direction, which is a positive sign going forward. The first thing we'll see if there is a trend change, we will first see the 50-day moving average start to trend downwards. If it does that and it starts to come closer to the 200-day moving average, and you might start to consider the real risk of a change in trend. And that's something that I'll be looking at closely for over the S&P 500 and some of the other global major indexes. Looking at the gold price, we can see back in 2019, we had a golden cross, which turned into a very strong trend for gold. The golden cross occurred around about 1250 for US gold, and we saw the 50-day moving average stay well above the 200-day moving average, even with the short spike down during COVID around this period. And then we saw the spike up to all-time highs in August 2000, where gold reached about 2070. But from there, the price of gold started trading down. So you can see after a period, the 50-day moving average turned down, and then it crossed below the 200-day moving average, causing the death cross to occur right here in February 2021. Since then, the gold price has been trading in large swings, but pretty much it's been trading either downwards slightly or sideways, which resulted in this failed golden cross here because the 50-day moving average broke above and then broke below because we had that quick spike down as well. So gold price has seen another golden cross occur here around November, December 2021, with the 50-day moving average crossing above the 200-day moving average. Now, the exciting thing for me when I look at this chart is this 200-day moving average, which was going up all the way until this period, started turning downwards as gold entered this downtrend, slightly down sideways trading pattern. But recently, as you can see, the 200-day moving average has flattened out and has started turning up. So an even better signal is we've got the golden cross breakout, but we've also got both the 200-day moving average and the 50-day moving average both actually rising at the same time, which is very positive when I look at the chart. What that tells me is the downward pressure has bottomed out and there's not as much selling over the gold price. It tells me that the bulls are trying to push the price up and have been somewhat successful so far. So it gives me a bit more confidence that this golden cross breakout over the gold price could lead to an actual major upwards move and a whole new bull market for gold. Looking at the weekly chart of gold, we can see there's this longer term downtrend which started from the all-time high above 2000 US and has seen the price come down to trading currently around 1820. But combined with this, we've seen a shorter term uptrend from these lows around the 1675 mark, which was hit a couple of times. And then we've seen a decent rise to this 1820 type mark. So the trading is now caught between a longer term downtrend and a shorter term uptrend. Because the latest direction has been up, that means that the odds are more favorable to an upwards breakout above this downtrend line. And combining that with the moving averages we saw before that have both moved upwards, I believe there's a better chance for gold for its next breakout to be upwards. And I also believe it could lead to a strong major move upwards for gold in the coming year, 2 years, or even 5 years. So what are your thoughts on the gold price? Do you think this latest golden cross is going to lead to a brand new uptrend or a major bull market in gold? please put your thoughts in the comments below. I really would like to see them, and I'm open to any thoughts, no matter what they are. I'm Biko Konstantinos. Hey, I'm so stoked that you've watched my video. Don't forget to subscribe if you like my content. I appreciate you, and I'll catch you next time.